Today's topic on This is Jax, I'm going to be talking about national housing market projections and how they affect us here in the local market. Right here in Jacksonville, it's been a busy week. If you're watching on YouTube, you'll see I'm in the suit, dressed nice. Actually, just came from a new listing I signed last week. We talked about this on the last episode. You know, there were folks waiting until after the election. This happened to be one such scenario where I met up with them originally a few months back, but you know, there was some uncertainty in the market. What's going to happen? Who's going to be elected? And ultimately, here's how business works is, yes, it is affected, but it's not affected necessarily immediately. I mean, it is. Either way, life goes on, right? For us out here, I joke a lot and I say, I'm just trying to live my best peasant life. It's kind of a joke, but kind of serious. And what I mean by that is, you know, no matter who's elected, I got to wake up tomorrow and I got to go to work and I got to provide for my family. So if the market shifts or the market change, it doesn't matter. I'm just going to figure that out and I'm just going to go forward. So that's what we're doing. And we're here. Welcome to This is Jax, a hyper-local podcast. We're going to do our best. We're going to bring on successful business owners, the people who drive the cities, share a lot about what makes our city so great. So you can be confident and comfortable. This is a city that you want to call home. So we've had the election, just signed another listing, beautiful home. I can't wait to see that video. It should be coming out by the time you're listening to this episode. Listen, I've got a VIP dinner coming up May 21st of 2025. It might seem far off, but it's going to get here quick. I'm hosting a VIP dinner. It's a special invite-only event. Here's how you can be sure to attend. You just send me 2 referrals, people who are looking to sell or buy real estate from now until May of 25. Everybody knows 3 to 5 people. I'm just asking you to send me 2 of them. That's all you need to do. The referrals must close on their sale or purchase, and the closing date must be before the dinner. So let's look a little bit at housing market outlook. What can we expect now? We're past the election. Thanksgiving is next week at the time I'm recording this. So we've only got a few weeks left in the year and it's going to come fast. And 2025, it's already starting to move. So to get this data, I look at a couple different things. I look at the NEFAR stats right here in Northeast Florida. That's Northeast Florida Association of Realtors. I look at all of their data and see what they have going on. As well as I look at NAR, I've got a couple things pulled up. There's a couple other, news outlets that I look at. But bottom line today, that's what we're going to talk about. We're just going to talk about some projected sales growth, what we expect from mortgage rates, and what's driving the demand, right? What's the demographic? What does the 2025 buyer look like that's going to be in the market? So looking right away, we know that it's an election year and historically housing activity tends to rebound after elections. It's driven by reduced uncertainty, right? We are certain now the election's over. We know who won, who's going to be the president, the next president coming in. And so people, like I said, they basically know what's going to happen, what the outcome's going to be. And either way, you got to wake up in the morning and you've got to go to work. So that being said, the chief economics, Lawrence Yoon, his prediction is predicting an increase by 9% in 2025. And it doesn't stop there. They're predicting 2 years out, saying 2026. So, there's a lot of optimism in the housing market. This matters to you as a buyer. A lot of times we hear buyers sitting on the sidelines saying, I'm going to wait for houses to come down. I'm going to wait till the market crashes. First thing I like to say is, you shouldn't be hoping that the market's going to crash. When the market crashes, you're not going to be out there buying properties, most likely, if you don't already own one, right? If you are a first time, you think you're going to be a first time home buyer and you're renting right now and you're waiting to time the market and the market's going to crash, you're probably not going to be buying because you're going to be looking for a new job, because that's what happens when markets crash. People lose their jobs, people lose their homes. The economy is in a big mess. So it's not like an opportunistic time to go out and seize the day, right? If you're not in it. Now, if you're a seasoned investor, you own several properties and you have capital and you have leverage, then yes, if a market crashes, that is a time that you can seize it opportunity, right? You're still probably going to suffer, but you have something to invest so that when the market rebounds, you see returns on your investment. I'm just putting that out there. There were a lot of people that in 2018, 2019, 2020, even, right? Especially when COVID happened. Well, the market's going to crash. I'm going to just wait. Then what happened, right? We saw insane inflation. House prices went up, right? And so a lot of those folks still haven't purchased a home. They're sitting on the sidelines wishing that they would have, because anybody who did now is sitting on a mountain of equity. And we'll talk about that in a minute too. Mortgage rates are going to affect the market as well, right? They were high last year, 8%, peaked over 8% last October. They're down now. And, we're anticipating that they're going to stabilize around 6%. By late 2025, you can get 6% now. We refinanced our house down to 5.75 already. Closed on it last year at 7.1%. Refinanced it down to 5.75 as soon as I could. That made a difference in our payment. Big difference in our payment, actually. I'm probably going to be sitting there unless they come all the way down. Looks like in 2026, they could be coming down to 5.6%. Now, that's an average. You might have a higher interest rate or you might have a lower interest rate, but ultimately, that's what they're projecting. Keep this in mind. It's kind of a saying, right? Interest rates, they take the elevator up, but the stairs back down. So they go up really quick. And the point is to slow down the market. And it's what, all the suits in Washington are doing to try to keep things right. Whether you agree with the way they do it or not, that's what they do there at the Fed. And so right now they've got them there. And so we'll see those come down. Okay, so we've got good rates. Most experts agree that like 5.5% is the sweet spot for people to go out and buy homes. It's not that 2% rate that we saw that causes an absolute frenzy and makes it impossible for the first-time home buyer, but it's not the 8%, 9% that also makes it impossible. It's right there, 4 or 5%, 6%. That's the sweet spot, right? The demographics that are driving demand, we've seen growth in multi-generational homes. So that's people moving back in with their parents or not moving in with their parents necessarily, but going in on a house together, multi-generational. And with that comes all cash buyers. There's a lot of people who did own a home before 2021, and now they're sitting on sometimes hundreds of thousands of dollars in equity. I don't know that I've got the stat on here or not, and we may get to it later, but one stat I was reading is just talking about the disparity and the difference between the net worth of a homeowner and the net worth of a homeowner. Here it is right here in this article. We see that the difference is estimated median net worth between homeowners. Right now, median homeowners in America, $415,000 is their net worth, and renters, $10,000 in 2024. You guys, there is just so much value in owning a home. I know people that they don't want to deal with cutting the grass. They don't want to deal with the maintenance of like a leaky faucet. Listen, your 65-year-old self that's trying to retire will definitely appreciate it. So we're going to see that. Single buyers, particularly younger generations, are entering the market at larger numbers. So you got a lot of Gen Z out there now starting to make purchases. You have millennials making move-up purchases, right? Gen X is driving the market. So we see a lot of that now. Those are kind of like the projections for the housing market outlook. And remember, these are national stats. We're going to talk a little bit about how they affect us here in Jacksonville. Key market trends. Remember the election impact? We already touched on it. There was some uncertainty, but now the election is behind us. So usually the market, it speeds up. It heats up, as you would say. Some economic factors, improving employment rates and stock market performance are boosting consumer confidence. So job number reports come out. Inflation reports come out, and there's a lot of, when you get into the data, some people argue, well, if we have so much immigration, then it skews the numbers. That may or not be true. I'm not here to debate that. This isn't a political show. I just know that, hey, the data shows, the official data says that we're getting this, and whether it's true or not, there's still a lot of people who are very highly influenced by legacy media. So if legacy media tells them jobs are good, in their mind, they think jobs are good, and they're more confident making a big purchase or taking out a big loan to buy a house, right? Rising home prices have increased equity for homeowners, encouraging more listings. So going back to that, we have people who have owned homes pre-COVID. Now they're sitting on a ton of equity because the price of their home went up. And now if they want to sell their house and cash in, they can take that money, they can make a move, they can, put it into some other investments, truly retire, whatever it is. So we see a lot of that. That's it. And we also see inventory improvement. So there's a slight increase in available homes. Remember, we were talking about on the last episode, the difference between 2024 home sales around 4.6 million and looking to go up to 5.2 nationally next year. And so we'll see a little bit more, still a little bit tight. A normal number would be like 6 or 7 million, but that's that. And remember, as people see these numbers come up and they try to compare it to the years where the great recession of the early 2000s, how many homes were on the market. We've got some graphs. I'm not going to pull them up for this episode, but it is drastically more. So trust me on that. If you're planning to sell your home in 2025, you really got to start prepping today, because the process of selling your home, it takes some time, right? From your initial strategy meeting to closing on your sale, it takes 3 to 6 months. Data shows the seller's profits peaked this year in April, and April 2025 is only a few months away. So if you want to walk away from the closing table with the most amount of money in your pocket, you got to start today. So if you're thinking about selling, head to rigsgroupfl.com/sell my home. Fill out the consult form. We'll schedule a free strategy meeting today. So how's it going to affect Jacksonville? We just talked a lot about some national numbers, and what do they mean for us here in Jacksonville? How's that going to help us? It's going to be positive. Positive trends national are going to be positive trends for us. We're going to have higher demand in 2025 and 2026. So let's just talk about 2025. We don't need to overcomplicate it. And a lot of things change. Anything could change, right? But with the projected 9% increase in homes, it's likely going to influence us positively. That's because our city is growing it's popular for a relocation destination. Folks who are moving from areas that are too expensive, or from the politics that they don't like, or they want warmer weather, whatever it is, they like to come to Florida. It's a popular place to live, and Jacksonville is more affordable than the other locations right currently. And so it just makes it popular. You get all the benefits of Florida, and you still get a little bit, honestly, you get a little bit cooler winter as well. So if you're from the Midwest or the Northeast and you like cold weather a little bit, you might not be interested in Miami where it's just hot all year. You want to come up north to Jacksonville and experience a little bit cooler weather. I will tell you, it was like 50 degrees at night. It looks like it's going to drop down to 45 at night. I actually put a log on the fireplace last night and out on the fire pit, and it was nice. It's nice weather. It's perfect. I started out this morning in a jacket because below 70 degrees, I'm wearing a jacket, but then the sun came out and was so hot. But that was fine. So we also sellers can expect more interest from buyers, particularly those moving from higher price markets. Like I just said, they want that affordable lifestyle that Jacksonville benefits. Also improving inventory levels. So it's still going to stay tight, but sellers will face a little more competition because there might be some homes on the market here, some more homes. So pricing your home appropriately and preparing it well for the sale is more crucial than ever. Looking at the NEFAR stats, we can see that closed sales were down, but they will go up. Last year in March, April, May, those were the highest months of closed sales. And remember, I talk about it all the time. The next number we have to look at is median days on market. And in January, it went from 45 days on market to February at 26, and then down to March at 23. So those homes that were closing in March, April, May were put on the market in January, February, March. And depending on when you put them on, if you're hitting that sweet spot of the end of third week of January, first week of February, anywhere in there, you're going to be on the market a month to a month and a half. And so that is the time to get ready. And most chances are we live in our house differently than we sell our house. So you're going to have to do some updating, some decorating to get your house ready to hit the market. That's why I say it's a 3 to 6 month process. And you really got to be on top of those stats. But there's a lot of equity gains. Rising home prices nationally and locally have increased homeowner equity, providing Jacksonville sellers with strong leverage when upgrading or downsizing. You definitely have some leverage here. I run numbers for people all the time. And listen, in 2017, 2018, 2019, if I went into a seller's house and said, how much do you owe? How much is your taxes? How much is all this stuff? And I put the numbers together for them, and I sat down with them, went over what their neighbors' houses are selling for, how much they could sell theirs for. People who were walking away from the table with $17,000, it blew their mind. It was the happiest day of their life. Now it's like, if you're not getting $100,000, you're upset about it. But that is the case. So many people I've run numbers for, and you're looking at $143,000 of equity, $198,000 of equity. So if you haven't got a free equity report since, 2021 or prior, you really should sit down with someone and see. You might be surprised how much equity is in your home that could allow you. And you can do two things with that. You can cash out some of that money and potentially do some updates to that home. If you love that area and the location and the home, but you want to update it, you can do that. And then you can still remain where, like, hey, I was able to update my home with the money that was in my home. It's like a savings account that way, right? And you can stay there and really enjoy the place. Or you can sell it, cash in all that money, roll it into the next property and roll it into investments and go from there. But ultimately, there's a lot of equity gains. So the bottom line is, it's going to be a positive market for sellers. But for buyers, how's it going to affect buyers in the Jacksonville market? Stabilizing market rates. Remember what I said? They take the elevator up and the stairs down. They're going to start balancing out, right? The forecasted drop in mortgage rates is going to improve affordability. It's going to enable more first-time buyers to enter the Jacksonville market. And buyers might consider locking in the current rates if they plan to purchase soon, especially if they find a home meeting their needs. I mean, these rates are pretty stable. Going into 2025, they're probably going to stay where they're at and go really slow down to 5.6. I work with a lot of VA buyers. So any active duty or veterans, remember, you can use the VA IRRRL. That's a streamlined refinance. It's a super easy process. I've done it twice before on my first home and now on this home already. And like I told you before, I got a 7.125 interest rate, closed on the house, was making my payments. 6 months later, called my mortgage broker. Hey, what can we do? Hey, I can get you down to 5.75. Boom, push it, skipped a month's payment. We rolled all the fees into the loan, refinanced the house. The balance went up slightly because we rolled some fees in, but my payment went down like $600 a month. I didn't have to do anything. I didn't have to send in any paperwork. I didn't have to reapply. It's a streamlined process. That's why it's called that. And so if you're a veteran or an active duty buyer here in the area, we've got a lot of military in Jacksonville. That's a special note for you. Don't forget, we're going to see a multi-generational and cash buyer. A lot of appeal for retirees and families. So you figure if somebody else is sitting on a mountain of equity, some states, people got even more equity than we got. And remember, they might be selling their $2 million apartment in New York City, coming down here with $1 million. We can buy some pretty nice houses in Jacksonville for that cash. So we definitely are going to see that. Jacksonville's got a lot of post-election confidence here. We're probably going to see a boost. We're going to just follow the national trends of increased activity and our population growth. So if people are moving because Jacksonville is a city that's growing, you're going to see positive. So ultimately, for sellers, it's going to be a prime time to sell if you're growing demand. And for buyers, plan to purchase strategically. Okay. I've got 90 ways we serve buyers. It's a great form. It lets you know everything we do. If you're looking to work with a local expert, help navigate a competitive market, then I definitely would get you a copy of that. Just hit me up, nate@riggsgroupfl.com. Looking at this data, we're seeing a positive year. And I know it seems a little bit like, hey, a lot of realtors out there, I see like memes and jokes, and it's like, now's a good time to buy. Now's a good time to buy. Well, the other thing is, when was the best time to buy? It was yesterday, right? Because you're always going to be making an increase. So don't try to time the market. Just do what you need. Is the time right for you to buy a house? Is the time right for you to sell a house? If you were waiting until you had a certain amount of equity in your house and now you have it, then okay, you've hit that check mark. But trying to time the market to where, okay, I'm going to wait till it crashes, or I'm going to wait till it comes up, like you're playing the stock market, that's just not really it. Now, if you're a seasoned investor, you can do that, but that's a totally different world. That's not what we're talking about here. I want to hit on one more thing here on the NEFAR stats. Month supply of inventory is at 4.9%. It's up 17% from last month. And if we look at it year to date, okay, apparently when I do the year to date filter, it disappears. So we're not going to do the year to date because it only works on the months. But for the months, 4.9%. We can look at in March, it was at 2%. I've been saying this 2 and 3 months supply of inventory is unhealthy. That is a strong seller's market. The buyer doesn't have much of a leg to stand on, because what it says is within 2 months, if no new homes came on the market, all of these are sold out. So that's a high demand. But looking at 5 months supply of inventory, 5, 6, that is the sweet spot of months supply of inventory, where it's a good market. Both sellers and buyers have to be pretty competitive, but nobody is just getting absolutely destroyed. Once we drift up to 7, 8, 9 months supply inventory, now we're talking, okay, there's too much inventory, and it's not good for sellers, but it's good for buyers, but not necessarily, because there's uncertainty in the market when you have too much inventory, right? So we are entering into prime real estate, moving into 2025. Just head to rigsgroupfl.com, and there's a little connect with us button there, or you can just shoot me a text, 904-599-8409. Thanks for tuning in to This is Jax. We'll catch you next time.